Good morning and thank you so much. I would love to talk to each one and try and make as maximum use as much of this 5 hours that we've got. Don't worry too much about the time because fortunately and thanks to Khyaal, I have been given sufficient time for this presentation. What we are going to be talking about, ladies and gentlemen, is first of all, we'll talk about the 7 golden rules of personal finance. The first of these golden rules is that wealth management is important. We all understand the importance of money in our lives. Is money the most important thing in our lives? Definitely not. I think, like a lot of other things in life, the number three is very important. There are three aspects of our life, that is, our physical health, our financial health, and most importantly, our emotional or our mental health. But wealth management is definitely important. The only people who tell you that wealth management is not important are probably those who have made probably the first 100, 200 crores. They've either inherited it, or in India, we have this other variety, the sadhus or the godmen, who themselves live such an extravagant life because they've got their own jets, they've got their ashrams, etc. Now, I'm not disputing these people, but let's talk about us normal people, retired people, for whom managing the day to day expenses is important. So, we are going to start with the very beginning. I'm going to start with the very basic level. The other thing that I want to tell you, ladies and gentlemen, is that it is not as difficult as it is made out to be. So, neither is wealth management difficult, nor is it as difficult as accountants make it out to be. I always talk this in my lectures that finance and accounts is not difficult. Accountants are sometimes difficult, with no offense to any accountant, of course, because I am myself a chartered and a cost accountant. You must be wondering, what is this one golden rule? ये one golden rule क्या है? The first golden rule of the world of personal finance is that there is no golden rule. Nothing is permanent in the world of personal finance. Like it is written in the Shrimad Bhagavad Gita, that parivartan hi sansar ka niyam hai. Or what the Confucius, the Chinese philosopher, said about 1500 years ago, the only thing permanent about life is change. Similarly, there is nothing like one golden rule. For example, my Gujarati friends often tell me, Balsara Sahib Sunnu Sauthi Saru investment, which means gold is the best investment. In the course of the 5 days, we'll talk about gold also as an investment. We'll see what are the advantages, what are the disadvantages. Similarly, if a year ago somebody had told you buy the shares of the Adani group of companies, you would have blindly bought them. Today, we are not so sure what has happened in the last 1 year. If someone told you that interest rates are going to fall, and that was universally accepted, that interest rates would fall, but actually interest rates have risen over the last 1 year. And over the last 3 years, interest rates have been rising, which for us retired people is a mixed blessing because we get a little more on our investments, but at the same time, inflation is killing. And we'll talk all about this in the course of the next 5 days. Expenditure is more in the control than income. Now, if you look at the two aspects of personal finance, and you don't need to be an accountant or even know the basics of accounts to understand this, that as far as our personal finance is concerned, there are two pahlus to it. दो पहलू होते हैं पर्सनल फाइनेंस में, वो है इनकम एंड एक्सपेंडिचर. Now, when it comes to these two pahlus, please understand that income is not at all under your control. Even when you were working, even during your working life, you would always feel that भैया थोड़ी सैलरी और आ जाती तो कितना अच्छा होता, 15-20 हजार और सैलरी में आ जाता कितना अच्छा होता. But that is not under your control. Similarly, post-retirement, your income will mainly come from your investments, by the way of interest. And interest is a function of the market rates of interest. Now, supposing, and we'll talk more about this in interest, probably on day two, day three, we'll talk about interest. Interest is something that is dependent on the market forces of demand and supply of money. We'll talk about that a little more probably on Wednesday. But when you look at the second aspect of finance, that is expenditure, expenditure is a little more under your control than income. I fully appreciate that there are certain times in life when even kharcha is not under your control. Supposing you have to admit your parents to hospital, supposing some children have to be sent for education abroad, then even expenditure becomes a little uncontrollable. But there is no denying the fact that income is totally not under your control, but expenditure is a little more under your control. Now, if you look at the first basic equation of personal finance, that is income minus expenditure is equal to savings. Please appreciate that if income is not under your control, the only way you can add to savings is by bringing the expenditure down. I appreciate that at this age in life it's difficult, but at the end of the day, you can't do much on the income side. So whether you spend a little less or you earn a little more, it leads to saving. And saving is something that is the prerequisite for investments. Investments, as we'll talk about over the next 2-3 days, are a function of what you are able to save. It is a function of income minus expenditure, with income being very little under your control, especially if there are basically for retirees, there are two sources of income. That is the interest you earn on your investments, and probably if you have rented out some property, if some of you are working still, probably a consultant's job, we'll look at all that. And then occasionally, if you need it, you might have to sell off some of your shares or investments, or you might have to sell off some of your properties, which again bring into things like taxation and stuff like that, which we'll talk about. And this brings me to the next point. Any income tax paid is money lost forever. Now, when I'm saying this, please do not misunderstand me. I am not in the least trying to suggest to you that you should not be honestly paying your taxes. Because with the kind of data analytics, with the kind of the artificial intelligence that is available to the income tax department, those days are gone when you could hide some small cooperative bank account somewhere and some deposits of 5 lakhs, 10 lakhs in some small bank account. Today, with Form 26AS, which is basically your income tax kundli, if it comes out, every single transaction that you do is covered by the income tax department. But even if you spend a large amount of money, supposing you're going abroad, supposing you lend money to someone, all this data is available. But please understand that what is the income tax department interested in? And this is the misconception that some of us have. ये हमें गलत फहमी है कि the government is not really interested in what you are spending, because the word is what? The word is income. Income means, imagine, translate this into plain English. Income, money that comes in, पैसा जो अंदर आता है. So any money coming into your bank account is something you need to be very, very careful about. But at the same time, I want you to appreciate one thing, and appreciate the very significant difference between tax avoidance and tax evasion. Tax evasion is something when you don't disclose some income. Supposing there is some bank account and there are some fixed deposits you have in some small cooperative banks lying somewhere in some remote village in India, and you don't show that interest, and some or the other there's no TDS deducted, etc., then you are playing a very big risk by not disclosing that income. And those days when you could not disclose your income, or those days when you could transfer it to your children and think that you will enjoy this money, are over. So I'm not in the least talking about tax evasion. I am talking about tax avoidance. And I was very fortunate that I did my chartered accountancy with one of India's greatest tax lawyers, a gentleman by the name of Shri Nani Palkhiwala. And Palkhiwala Saab, as young chartered accountant students, would always tell us one thing. Ladies and gentlemen, please appreciate and understand the difference between tax avoidance and tax evasion. The one more point that I would like to talk about, and we'll talk more about this tax evasion and tax avoidance a little bit today and a little bit on day two when we'll talk purely about income tax. And we can see how staying within the parameters of the law, कानून के दायरे में पूरे रहकर, without doing anything wrong or anything legally incorrect, how we can minimize and, if possible, eliminate your income tax altogether. And just to give you an example of how much you can eliminate, and I'll give you an example which might make you a little aware of what it is. Today, up to 7 lakh rupees, there is no income tax. Now, 7 lakh rupees, if you take interest rates at about 7%, or let's say it's 7%, which means what? That if you have a corpus of 1 crore, you will get about 7 lakh rupees. Now, between the husband and the wife, supposing there is no restriction on them gifting each other money. So if supposing the husband has got, say, 2 crores of investments, he can gift 1 crore to the wife, and between both of them, because income tax recognizes the first holder, between both of them, ensure that their income is below 7 lakhs and do not bother about this animal called income tax altogether. So at this stage, I'll take my first break. What have we talked about? We've talked about the first two things we talked about were a little bit philosophical. We talked about wealth management being important. We said that it's not the most important thing, but it's definitely one of the important things in the world. It's not difficult. Finance and accounts guys are difficult. Finance and accounts as per itself is not difficult. The one golden rule in the world of personal finance is that there is no golden rule. Nothing is permanent. There is nothing like one good investment. Otherwise, you wouldn't need this lecture. So each investment has its advantages and its disadvantages, which we'll talk about. We'll cover all the investments, probably most of them on day 4. Expenditure is much more under your control than income. And the first equation is income minus expenditure. As long as income is more than expenditure, you're all right. If your expenditure is more, either you have to take a loan, which is something that at this stage in life, I don't think I would advise you to do, or you have to live off your capital and your capital becomes less. Any income tax that you pay is money lost forever. Now, the next point I want to make is something which I think is a very important point, that our money should outlive us. Now, what do I mean by this? Please understand, हम भारतीय हैं, हम हिंदू संस्कृति और द इंडियन संस्कृति में मानते हैं, और हमारी हिंदुस्तान की संस्कृति क्या कहती है हमें? हमारी हिंदुस्तान की संस्कृति ये कहती है कि अमीर के अमीर आदमी या गरीब से गरीब आदमी ये सोचता है कि मेरे बच्चे और उनके बच्चे का भविष्य मेरे से उज्जवल होना चाहिए. Our children should enjoy a better future than us. And whether we like it or not, this Ujjwal Bhavishya has a lot to do with money. That is different from the West. The philosophy in the West is the day I die, my money should get over, or alternatively, the day my money gets over, I should die. The extra amount that on my death is left in my bank account on my investments is the extra amount that I've worked, which I need not have worked. Now, this is not we have been taught. I obviously think that the Indian Sanskriti is better. And if I was doing this program in the United States or in UK just now, believe me, 6 out of 100 people have taken a loan just for food and paying their electricity bills. Now, in India, we don't take a loan unless it's absolutely essential. I know this is not applicable to you, but it's something that I'm very particular about. Even for youngsters, I allow a loan only for housing and education. But coming back to our point, what do I mean by our money should outlive us? Please look at the life expectancy. Please look at the life expectancy over the last 60 years. The average life expectancy over the last 60 years has gone up from 48 years to about 78 years, which means on an average, life expectancy is going up by 5 years every decade. हर 10 साल के दशक में हमारी एवरेज लाइफ एक्सपेक्टेंसी 5 साल से बढ़ती है. Now, what does this mean, ladies and gentlemen? This means, ladies and gentlemen, those of us who are in our 60s can reasonably expect to live till we are 80 years old. Now, what does this mean? Now, obviously, unfortunately, in India, the retirement age is 60. A few of us might be lucky, like I am, that we probably work till we are 65. I'm 65, I'm still working. So we will get some consultation income. But for those of us who depend, as one of the participants said, that if you're entirely dependent on interest, which again is taxable and which is falling, then you obviously need to look at things like your expenses, which even if you don't want to look at, then the only way out is to look at drawing from your capital. We'll come to that in how much is enough. I have some formulas for that, which we'll talk about most probably on day 3 or day 4. But the point I want to make is that 60 is the new 40. You have 20 years more to live. Now, the mistake we make is that we expect our children to take care of us. Now, this is the worst thing that we can do. And I am not blaming the children for it. You know, let me give you the classical example. Our children live a much more stressful, a much more competitive life than what we do. Let me give you an example. When I qualified for my chartered accountancy in May 1986, I got the 16th rank in India. That time there was no WhatsApp, there was no mobile phone, there was nothing. And I was studying for my costing exam, for my costing final exam. So I was studying till 2 o'clock in the morning, which obviously meant I didn't get up till about 10 o'clock in the morning the next morning. I'm always a late riser. So you will not believe this, but by 9:30 in the morning, there were 4 or 5 companies with an offer letter at my house. God alone knows from where they found the address. Now, my younger son, he secured the 9th rank in India about 2 years ago. Okay. He didn't get a job for 6 months. He didn't get any job for 6 months. This is the extent to which unemployment is a problem. Also, at our times, once you joined a company, like I joined Larsen and Toubro, I stayed there for 35 years. You don't change companies. Today, the trend is that if you don't change the company every 2 years, you are considered part of the furniture of the company. So, this is the life. Again, in our personal relationships, I have a fantastic wife who is my best friend. Once you get married, that's it. I mean, that is your friend, philosopher and guide. और हम हिंदी में तो कहते हैं, हम हिंदुस्तानी संस्कृति में तो कहते हैं, सात जन्म का साथ है. Today, the kind of expectations that people have, youngsters have of each other, you see divorces much more frequently. So youngsters have a much more difficult life than us. So it's not fair for us to expect our children to take care of us. If you are 70, your son or daughter would be about 40, 45. She would have her own children. She would have the problem of them buying a house, of settling the children. If the children want to go abroad, you know how much it costs. So I think the best way we can do is we at least try to not put any financial burden on us. You'll be surprised to hear this, but I know at least 10 couples who are sending money to their children every month. And they are living a decent life here. But thanks to the booming stock market and thanks to some wise investments, and more importantly, thanks to the simple lifestyle they are leading, They are 85 years old and they still travel by bus and second class and train. And they say that it gives them a lot of fun. They can probably afford to buy the train. Let me tell you that. But they say, Sab, hamala yachamadez maza yete, which means we enjoy this. The last golden rule, which we are going to be talking about, is the one you have covered, and it is something that I think hits all of us, and that is inflation kills. Inflation kills. If you look at this, there are the three classes of society. There is the high income guy who's very much contented. He's got a very decent sized umbrella. He's got a life jacket. He is not impacted by the price level. Even his shoes are not wet. The middle income guy is like us, salaried people, retired people. He is the one standing in between. And the low income guy is the guy with barely his nose above the water. Now, let's take that all of us are in this middle income group. And we always have this dilemma or this dharam sankat or this duvidha that sometimes when we make a killing in the stock market, or as my 80-year-old friend told me, he made good money in the mutual funds. So you're looking at the right hand side and saying, I'm comfortable. But very often, and some of the questions that you yourself raised, you're looking at life and saying that, am I much better than the guy down there below in the water? So how much you're going to spend is again a function of your lifestyle. When I talk to our directors, or when I talk, let me first give you the example which matters more. When I talk to our workers, our casual workers, and I say that in a city like Mumbai, where I've spent my 65 years, you need about 80,000 rupees a month for a family of four to comfortably stay. I'm assuming that as a couple, as a retired couple, you might need a little less. But don't forget one thing, that I am also including if your children are abroad, if you want to go for a holiday, you want to live a comfortable life, which you're well deserved. My wife always tells me that you need a comfort. I mean, you work for 40 years, you at least now don't need to bother about money. You need about 10 lakh rupees a year, which is about 80,000 rupees a month. So when I mention this to our workers who retire from L&T, they tell me in Marathi, साहेब ना साहेब हे खोटं आहे, आमचं घर 25,000-30,000 मध्ये पण चालतं, which means that I can run my house in 25-30,000. On the other hand, and this is an actual, I'll be giving you examples which are my personal examples, so you need not worry about the truth of that. I know a young couple, no longer young, but they were young since I know them. That's about 25-30 years ago. Today, both of them are in about their late 50s. They are going to retire in about 3 to 4 years. Okay. Now, about 25-30 years ago, they eloped and got married, intercaste marriage, and they took a very conscious decision, which at that time was very bizarre. But today, a lot of young couples are taking that decision. They said, we will not have children. हम बच्चे नहीं पैदा करेंगे क्योंकि हमको वो जवाबदारी नहीं चाहिए. And they said, we will concentrate on our careers. And they concentrated brilliantly on the careers. The husband is a pilot with British Airways. He flies around the world. And the lady is a commander of Indigo. Between both of them, after tax, which is significant, after tax, they get home about 10 lakh rupees every month. 10 lakh rupees every month. So let's round it off to 1 crore of rupees every year. So you must be wondering, how much have they saved? You'll be shocked if I tell you that after working for 30 years and probably earning, if not 1 crore every year, at least 50 lakhs, 70 lakhs. Okay, I understand that the crore is the recent salary. But even after that, their total savings between the husband and the wife are not more than 35 to 40 lakhs. Because that is the lifestyle they lead. You know, the lifestyle you lead is, this is what I said and what our Premji said, that the expenses are a little difficult to control. But just because you're earning more, and this is my advice to youngsters, you know, let's talk about cars. When you were a 5-year-old, as a young 5-year-old guy, as a kid, you wanted that red car which cost 80 rupees. When you started your career, you wanted that 8 lakh car, which was your dream car. And when you grew up in life and you became a CEO and all that, that 80 lakhs car also didn't satisfy you. But at the end of the day, a car is a toy. 8 lakh rupees or 80 lakh rupees. They go for, we in Maharashtra, who are in Maharashtra, where do we go for holidays? At the most, we'll go to Mahabaleshwar, we'll go to Khandala, we'll go to Matheran. At the most, we'll go once to Europe in life, and regularly we'll go to Goa. These guys go to holidays to such exotic places that you have to go in the map of the world and find out where this place is. Now, if this is the kind of respect that you have for money, so when I said try have a look on your control on expenditure, I'm not talking about normal people like us, but I'm talking about abnormal people. So the point I want to make is I know we won't do this, but this is an advice for your kids that just because you have the money, that doesn't mean you should be blowing it up, doesn't mean that you should be spending it and wasting it, because at the end of the day, income is not under your control. Expenditure is a little bit more under your control. Thank you.
Please like, subscribe and press the bell icon to get notified for new videos.